Is this the beginning of the new bull market? Well, it's a very tough question to answer, but we do have some very interesting signs that is telling us that we are actually about to enter a new bull market. All right, welcome everyone. So this is a daily market update that I usually do inside the RLZ Trading room every day. I give these small, short videos to give you guys, the members of the trading room, a update on whatever I'm watching in the market. Today, I wanted to do a public one on YouTube. So I wanted to show you guys one very interesting reason for why I think that the bull market has a pretty high probability of actually being on. So if you do like these small updates, consider checking out the RLZ Trading Room. You can go to the rlztrading.com website, and all the information you need is in there. You can check the link in the description below. So the shot that I have right here is on the S&P 500. I also want to recommend you guys that you go to the YouTube channel Prime XPT Academy, where I went live yesterday with Dirk from Prime XPT Academy. We looked at the FOMC event, the Fed interest rate decision, and we kind of covered that live and gave you guys a pretty, you know, a detailed explanation of when and where I think the bull market might be starting. And it's actually happening right now. So yesterday we had the Fed interest rate decision, a major event in all markets, whether you're trading crypto, forex, stocks, or whatever. It's a major event because all eyes is right now on the Fed and the inflation. So remember in the webinar which we had yesterday, we talked about how this, in my opinion, is the last resistance that needs to get broken for S&P 500 to really confirm a bullish market structure. So we first have this trend line right here, this descending trend line right here, and we broke above that one. You can also see how there's some very obvious changes in behavior starting right here, with the first high being very similar to the second high, and the third high being similar to the first and the second high as well. But the fourth test of that trend line gives us a much different price action structure. And then on the fifth retest, we break out. We break out the trend line here. We break above the trend line. We retest this resistance area right here, or support area in this case, and we continue higher to find some resistance here. And this is a major resistance area. If you go to the weekly, you'll see that it's a very obvious level on the weekly as well. So what I want to see for the bull market to be 100% confirmed is for this weekly candle to close above 4.1K. So weekly candle, which is closing in 1 day and 13 hours, close that candle above the 4,100K area. And when that happens, I want to see a rounded retest of this area on the daily. So basically what I'm looking for is a break and retest with a rounded retest on the daily with the weekly candle closing above. So let's say we have this candle closing here, and then another candle closing here. That's also the weekly close. We then want to see a retrace down here, which hopefully happens on Tuesday or Wednesday, because if it given a little bit more time, you have that rounded price action. Because if it happens right on the market open on Monday, it's just going to look like this. And we want more rounded price action. If we do see that and we do bounce here, I think it's highly likely that we do see a new bull market forming. And that probably means that Bitcoin, like if the S&P 500 starts rallying higher, Bitcoin is, and as you can see right here, Bitcoin has broken above this local range right here. We had a fake out, but if the S&P 500 continues higher, we're probably going to reclaim this range high. And if that happens for Bitcoin, I think the next target is the 30K area above, with the first possible TP if you're taking a long based on the break and retest of the range highs right here, which is the 24K area. So a break and retest of the 24.5K area. If you take a long in that area, I would say that the first trouble area is definitely the 28 to 29K area, and that's where I would want to take some profits. All right, so that's my outlook for the S&P 500 and Bitcoin right here. So, giving the press conference yesterday with the Fed interest rate decision, 30 minutes after they always have a press conference, and that was the market definitely picked it up as fairly bullish, right? They really did like what Powell was saying in that press conference, and I would love to see this price action continue into next week. That would be absolutely fantastic. So we have some question inside the trading room. Again, if you want to check out the community, you want to join us in the community. We had some insane good results last month. Last month was actually, I'm going to show you guys my personal trading journal right here. So I'm just going to go straight in and show you guys the trading journal. Right. So this is this week, and we haven't taken any trade this week because basically I decided not to trade this week because there's so many. There's a lot of news event. You can go to the news calendar right here. We had every day of the week we had major news event, and today we had the Bank of England interest rate decision. We also have the European Central Bank interest rate decision. So major news event, and then also of course um, tomorrow, which is the non-farm payroll and employment rate. That is like this is major things, and I think whatever happens during these news events will definitely um, set the tone for the possible future of the markets in the next coming months. So this will probably mark the high of this possible bear market rally or the start of a new bullish break in market structure and a bull market basically. So let's look at the journal right here. Last month we had a so you can go down here. We can look at the monthly results. In January, we had a win rate of 80, so around 89%, right? So 89%. We took 9 trades. We had 8 winners and 1 loser in the community. Everything is shared openly, transparently in the community. All the trades I'm taking and all my analysis in the community right there. And yeah, really good month last month. And we're not trading this week because of the major news event. And it's something I talked about in the live stream with Dirk yesterday as well. Like you've got to understand that the most successful traders, they're not successful because they trade a lot and make a lot of money because they take a lot of trades. They are successful most likely because they take fewer trades but better trades. And as you can see right here, I only took 9 trades last month and it was insanely profitable. So we have some question inside the community here, and I want to cover that. So it's from Crypto Khalifa, and so basically the question is all about the. I hope it's okay for me to share. Um, I hope it's okay for me to share the screen here. We can just look at it together. All right, so the question here is thinking about TPs. I understand your approach using the recent local highs as TP1 and then the 236, 382, 618 as TP2. Yeah, that's correct. However, when taking a trade, I believe I'm right in saying that we don't really want to take it unless the risk to reward is around 2. When using the local high as TP1, it seems that the risk to reward is often quite a bit lower. How are you working out what you expect the overall risk to reward to be? Have you worked out how often the system hits TP1, 2, 3, 4, and formula 2? Yes. Okay. Great question. It's a very important question. These are the types of questions you have to ask yourself if you're going to take trading seriously. So let's look at that. How do I calculate the average risk to reward of whatever trade I'm taking? So what I do is I have the and by the way, yeah, so I have the fib tool right here. So I enter around this area. TP1 is going to be 0, TP2 is going to be the minus 0.236, and TP3 is going to be the minus 0.382, and then TP4 is going to be the minus 0.618. Now, one of the reasons why I've chosen these TPs is, first of all, I just want to have specific specific fib levels where I'm always going to take TP because I want to have a systematic approach to trading, and these TPs usually gets hit. And if I do follow these take profit targets, I have 25% on each of these fib levels. So what I can do is we can use the range tool right here, and we can determine where the 50% exit points are. So that's 25%. I exit 25% at the minus 236. So 50% exit is here. And if I do that again between the minus 382 and the minus 618, that's now the second 50% target. So I exit 50% here and 50% here. Now we have to look at what's the middle line between those two 50% levels. That's right here. So if all the TPs get hit, I will have my average exit price between these two fib levels. That's one of the reasons why I've chosen these fib levels, because it gives me a very easy way to determine the average R of my trading setups, right? So that's going to be the average R of this trade if all the TPs gets hit will be 2.74. Very good, right? I tried to have TP1 has to be 1, at least 1. TP1 has to be at least 1 R. Now, what's the average R of all my trades? So this journal only goes back to November, but we can take a look to see. It's been a while since I looked at the statistics. So my overall win rate is 60%. My average R multiple is 0.34. So where can I actually see the actual risk to reward? I haven't. It's been a while since I actually went into this. What I would recommend that you do when you try to figure this out, what I recommend you do is, if you have a journal like this one with Edgewonk, you want to go into any specific trade, and you want to add a custom statistics. So you want to make sure that on every trade you have a custom statistics that says which of the TP has been hit. So I don't have that anymore because I know that I very rarely use all the advanced tools in the journal, because I know the system is working and I know my approach is working quite well. So we have, here is R distribution. So your results in R. So you have 6 trade. You can see that most of my winners are from between 0R and 0.5R. So we have 6 in this journal. We have 6 trades which are between 0 and 0.5 R, and I have 1 trade which is between 0.5 and 1 R, 1 to 1.5, and I have 3 trades which is up to 2, 1 2.5, and 2 3. So most of the trades are very small winners, and this is actually a perfect representation of how successful trading should look like. You see right here, you have most of the trades are either small losers or small winners, with the occasional big winner. So it's these big winners, and the fact that I have 3 which gave up to 2R profit and 2 trades which gave up to 3R profit, these are the ones that pretty much make the journal profitable. If I were to remove these trades here and add them on this panel or this one, the results would be much different. So it's all about having many small losers and many small winners with the occasional big winner. You know what? I'm probably gonna record a longer video and more webinar-ish video, kind of breaking down the average R of the system to see if we could do anything differently. Because basically what you want to do, and this is one of the reasons I do have these take profit targets. So I before I had 25 here, 25 here, and then 50 up here. The reason why I added 25 at the minus 0.382 was because I tracked all the TPs and I found that very few trades actually hit the minus 0.618, and a lot of trades actually hit the the minus 0.382 before moving lower. So I decided to take 25% of this take profit area and move it lower, and now my average profitability is actually much higher because I'm taking more profits earlier, but I'm still keeping some up here for that big winner. All right, guys, that's the update for today. I will have some more updates for you guys in the market update channel. But remember that I'm not trading this week, and you probably shouldn't be trading this week either. I think next week is going to give you some very clear views on what's happening in the market. Are we in a bull market, or are we just seeing a extended bear market rally? All right, guys, that's it for me for today. Thank you for watching this video. And if you are interested in seeing more like this on a daily basis, you go out and check the description to this video, and there will be more information in there. All right, guys, take care and see you guys in the next one.